My next speaker for this morning is Mike Lawrenson. Mike, it's always a pleasure to have you with us.
Thank you, Anil. It's a pleasure to be here.
Great, thanks so much for being here. So Mike is a portfolio manager at Laurium Capital. They manage the Nedgroup Investments SA Equity Fund for us. So Mike, I guess the first thing I want to chat to you about is the fund has had an amazing year, 2025. It's been such a great year for the fund. Do you want to talk us through performance relative to the index and the peer group, please?
Absolutely. Yeah, we've been fortunate this year. It's been a strong year for the SA markets, and we've been fortunate enough to have a pretty strong year. And from the figures you can see on the slide ahead of you, you can see it's been another strong quarter. The fund being up just over 13% versus the cap Swix of 12.8, and the competitors of around about 10%, and year to date we're up 31.5%. 1 year and 3 year we're still slightly lagging the Swix benchmark, but hopefully that's the underperformance from the last 3 months of last year, and hopefully that should roll off pretty soon. And you can see what we like to point out is that over a 3 and a 5 year period, we outperform the benchmark and the competitor category average 2/3 of the time. Just looking at performance and attribution, you can see that it's been a year of precious metals, so both gold and platinum. Then obviously Naspers Process has also been very strong this year. And another key outperformer, which we haven't owned, has been MTN for the period. That's been so. It's those 4 categories: telcos, gold, precious, and Naspers Process that has been behind the market and the market's performance. And you can see in terms of attribution year to date, our outperformance has come from our overweight holding in Anglo Gold Ashanti, and then we've had nice performance from both Impala Platinum and Northam. I mentioned Naspers Process being a strong contributor, and there've been a few other things. Anheuser-Busch has had a pretty good start to the year. It's sort of rolled over into the third quarter, but we're still positive on that stock. And then I guess the key focus on the underperformers this year are those stocks that we've been underweight, and in this case, Harmony and Goldfields. We do own Goldfields, but we are underweighted. Our preference has been Anglo Gold, and that has been the star performer year to date. And then I guess it's worth highlighting both Woolworths and Foschini. We own both of them. They've underperformed this year. Retailers and banks have had a little bit of a struggling year, but we actually are quite positive on the outlook for domestic SA Inc., and we'll probably go through that later on.
No, we must definitely chat about that a bit more. So I guess maybe a bit of an interesting exercise, but what would you say were the biggest contributors to index returns year to date, please? I mean, we can guess the biggest one, probably, right?
But the biggest one, I mean, looking at the slide ahead of us here, you can see that the market, the Swix index in this case, has generated almost 31% return, and 3 components have actually generated 90% of that 31% return. Gold being 14%, PGM 6%, and Naspers Process 6%. So it's been a very concentrated and narrow market. Funny enough, I do believe, though, that if the PGM metal prices and the gold prices hold these sort of levels, I think next year could be a very interesting year for the SA economy and for SA Inc. in general.
And Mike, I guess it's not very often that South Africa has actually done so well relative to some of the global indices out there. I mean, what do you say about that?
Well, I think that's the next slide. And if we look at it, and here the FTSE is Swix All Share Index is converted into dollars. So if you look at it in dollar returns, you can see how we've significantly outperformed all the global indices, including the S&P 500. So year to date, we're up over 43%. The S&P, for comparison, has done 14.8% for the year to date. If you look at it on a 1 year and a 5 year basis, you can see on a 1 year basis, we almost double the comparative indices there. And on a 5 year annualized return, we've done nearly 18%, and that compares very favorably with the S&P, for example, which in this case has generated 16.4%. So yes, it's been a very strong year, but as the slide shows, it's been a strong 5 years.
Yeah, quite remarkable numbers.
Yeah.
And Mike, something you alluded to just now as well, just talking about the levels at which gold prices and PGMs are currently at, and just the impact on kind of SA economic growth, if these are sustainable.
Well, here's the slide, and you can see how it's been a remarkable year for gold price, and particularly in the sort of last quarter, we've seen a big uptick in gold prices. But the same can be said for, and in this case, we're graphing the PGM basket price, which is a sort of a generic index for a generic mine in South Africa that sells platinum, palladium, rhodium, and gold. And you can see how it had a good rally from sort of May, June into August, and then more recently it's had a proper rally into September. And that is good for the fiscus, it's good for corporate tax returns, it's good for royalties. If these prices hold, I think it bodes very well. And there is a knock-on effect into the SA economy. It normally lags in terms of the impact on the real economy and on consumer confidence and consumer spending. It normally lags between 9 and 12 months. So as I say, if those sort of price levels hold, I think it's going to be a good year for SA Inc. next year.
And what about kind of combining that with the lower oil price? What does that mean for South Africa?
Well, here's a slide, and this was actually done by Nedbank SA Equities team, and you can see on the right-hand side, we are, or should I say, Nedbank is showing the impact of the higher platinum, palladium, rhodium prices, and there are a few other, and obviously the gold price, and then obviously the impact of the oil prices shown lower down, and that's obviously one of our biggest imports. And you can see if these spot prices hold, and I think this is probably out by a week or two, I mean, it would have a positive impact on the trade balance, and that's all very good for the rand, for economic growth, etc. So yeah, we need the prices to hold. But at this stage, I don't see anything other than another tariff tantrum, which we've experienced late Friday afternoon. That could potentially knock it off its rails, but I don't think at this stage anything is going to knock gold off its rails. I think gold's a beneficiary of
all the noise
tantrum.
And volatility.
Exactly,
yeah.
But PGMs could be at risk.
And then, Mike, I guess just something that's important from an asset allocation perspective, but just the relative valuations between bonds and equities, please. What are your thoughts on that?
Well, that's the sort of dichotomy that's facing us at the moment. On this slide, you can see how the bond yields have been inverted. So that's the orangey red line, and you can see how they've re-rated significantly, and they've gone back to sort of between 9 and 9.5%, whereas the market is actually derated, and you can see now we're sort of closer to the one standard deviation from the norm, and you can see we're sort of trading at roughly about a sort of 10 times PE, and for us, the long bond yield effectively sets the risk-free rate of which you should price SA equities, and in this case, with the bond yield rallying, markets have derated. So we think this is positive for the outlook for, let's call it SA exposed domestic stocks.
Yeah, definitely. I mean, just kind of zooming in on equity valuations in particular. So yeah, definitely still looking cheap compared to long
exactly.
term.
So that's the slide that I mentioned, and then if we look at it in the context of global markets, you can see. And this is now not SA Inc. This is the MSCI SA index. So it obviously doesn't quite tie in with the previous slide. But you can see, if we at the top, you can see the MSCI USA at north of 22 multiple. We're sitting at a 9 times multiple with
a massive dispersion. Hey?
Massive dispersion, and I think, that's a good fundamental basis to say, hey, if all the other factors, come to the party. We see further stability in the GNU. We see some of the benefits from, the things like logistics, for example. If we see Transnet being able to get third-party players in, and seeing further increase in exports, we don't even necessarily need the coal price to go up. We just need coal volumes to go up, for example, or iron ore volumes, and that's all very positive for SA Inc. Plus all the other things I mentioned about a stronger rand, stronger PGM and gold prices impacting the SA fiscus.
I mean, it's unbelievable that kind of 10 years ago, South Africa was more expensive than the MSCI World.
Yeah, and I mean, we've in a decade, but a large part of that was the last decade, and the the institutional malign in South African institutions, I guess.
Definitely, yeah. And then, Mike, I guess just to end off then, if you can please take us through the portfolio composition, positioning of the portfolio, and finding any big trades you've done recently, please.
Okay, so I mean, in terms of I won't run through all of those slices of the pie there, but you can see on the left-hand side we still very positive banks. We're roughly 20% banks. Naspers process, we still like the Tencent story. We think they're a big beneficiary of AI within China. They've got 1.3 billion active users, and we think they're going to do very well there. Gold, it's become very big in the index. We own around about 15% of gold. We have actually been taking some profits, and on the next slide I'll show you where we've been taking those profits. Global consumer, we're positive on Anheuser-Busch. Yes, it had a very good start to the year. It has rolled over a little bit on volume concerns, particularly out of South America, but we think that is a cyclical thing. It's more weather related. We like Bidcorp, a food services provider that has good geographic exposure globally and has a very strong balance sheet. It's got no debt. And then we still own a little bit of BTI. We still think that there's some legs to go in that. And then obviously we own PGMs. We positive, just given, we were of the view historically, and we've held PGMs for a while. We were of the view that the penetration rate for EVs was overstated. We've started seeing interest from China in platinum, and we've seen platinum particularly being strong. But even palladium, which was meant to be the laggard, that's rallied significantly in the last 6 months. And then, our preferred commodity today is copper. We think that on a 3 to 5 year basis, with AI, with the electrification, etc., of the grid, not battery electric vehicles, we think that's going to be a big beneficiary. And there our preferred exposure is through Anglo American and Glencore. And then on the discretionary retail side, our preferred stocks there are Foschini Group, Mr. Price, and we own a little bit of Woolworths. Running through, that's just a summary effectively of what I've said. And then these are our top buys and sells over the period. If we start on the sell side, we've obviously taken some profits in Goldfields, still preferring to hold Anglo Gold. Growth Point was a SA domestic property stock that we owned. We've also taken some profits there. And British American Tobacco, I mean, that was a laggard for many years. It's had a pretty decent run this year, and we've been slowly reducing our exposure there over time. Naspers process, there we've taken an absolute reduction, but we've also, just with the discount between Naspers and process widening, we've actually been switching some process into Naspers, but at an absolute level, we've also reduced our weighting in process. And Motus has had quite a strong year as well after struggling initially, and we've reduced our weighting there. And If we look at the buys for the period, Valteria Platinum, that was one we've been holding off on, waiting for the final sale from Anglo American PLC. And that happened, I think it was the 4th of September. We participated in that capital raise. And that actually was, I think, the strongest performing platinum stock in the third quarter. Glencore PLC is one we've added to. It's one we like, and we added to that in the period. Capitec Bank, it's one we've historically been underweight. This year, it's given you opportunities to get into that stock at what we think are attractive valuations. So we've been actively closing that underweight call. And then Anheuser-Busch, I've mentioned to you, it was a strong performer. It came back in the third quarter, and we've been adding to that. And then Pepco Holdings, that was another accelerated book build, which we participated in, and that sort of ties in with our SA Inc. story for the next 9 to 12 months as well. With a consumer focus and hopefully a better environment for consumers with lower interest rates, lower inflation, and maybe some increased economic activity going into 2026.
So lots of exciting things happening in the kind of SA universe.
There is, and long may it continue.
100%. Mike, thank you very much for your time. Always love chatting to you.
Thank you for the opportunity. Really appreciate it. Thank you, Anil.
Brilliant.